All right, welcome everybody. Today here we're going to talk real briefly on options mispricing. Okay, and basically being able to look at an option and understanding if it's low value, good value, and you can get it for a cheap price, or it's pumped up. That volatility is up there, and that option is going back towards zero. These are key places to recognize because you don't want to get heavy in an option too early. And you also don't want to get heavy in an option that ain't going friggin' nowhere. So one of those things that options mispricing is really tied to is your understanding of the perception of that stock. And this is where most people really have a lot of issues. And this is, again, why I teach tape reading. That's why, again, I preach it as the best method of trading out there versus your charts and all that technical analysis bullshit. Which are all lagging indicators, and the real sort of soul of these stocks, the perception, okay, what you're actually looking for timing, direction, or understanding who's behind a stock, who's buying, who's selling. That all comes from the tape. Okay, and that's one of the big components of the course here that we are about to get underway for the October and November session, which will be starting next week on Tuesday. We are offering now a fat discount. I will talk to you about it in a bit. I dropped the link there for you. One of the major components of the course, though, is tape reading. Okay, and that's one of the places where you are going to get a much deeper understanding of the perception of a stock. Okay, when are these things going to move so that you can find the option that is solid value and the one that's going to double in price, the one that's going to triple in price. Okay, versus coming into a stock, after the fact, after the easy money is sort of done, and paying these sort of high premiums for it. Okay, so we're going to give a couple examples here. We'll run through a couple examples. The best example of options mispricing is, guess what? And we're looking at the freaking stock right now. Anybody want to guess? When is the best example of when you get options that are just mispriced all over the place? Anybody? Anybody want to take a guess? We're looking at the freaking stock right now. All right, we got a couple guesses here coming in. Earnings season, exactly. Somebody threw out Apple here. Earnings season, okay? So let's take a look at the Netflix chain before the stock reported, okay? Before the stock reported. All right, so what you want to do when you have a stock that is about to report, take whatever's at the money, whatever the stock closes at, and you want to add the straddle. Okay, so you got 202.5. This thing was trading $8 at the close. This thing was trading $8 at the close. Let's just call it an even 7.5, and you get 14 points. Okay, that means the perception of this stock and what people are willing to pay for this thing, they're going for a 14-point move after the news is reported. Now, tell me, what is going to happen to all of these out of the money calls here? Off the open tomorrow, assuming the stock stays right here. Let's say the stock stays right here at 209. Maybe it even goes to 210. Let's just give it 210, whatever the hell. Okay? What is going to happen to all of these options? All of the out-of-the-money options, and even some of the in-the-money options here. Okay? What is going to happen? These guys are going to open up down 90 freaking percent. Okay? Example number one for options mispricing. This is the most classic example you are going to get. And one of the good things here, I guess we can just keep it on the Netflix here. You can see obviously Netflix has really been active as of late, broke all-time highs. Everybody is very bullish the stock. So when you have a sort of collective perception, and everybody agrees on that perception, guess what? In order for you to make money on the stock going higher in the options, you think you're going to just be able to waltz into some free premium here? No. Everybody is looking at this stock to go higher. You got price targets out the wazoo. It's the same as NVIDIA, okay? NVIDIA is another example. NVIDIA is a stock here that is trading, I don't know, 190 or so, and you got price targets of 220, 250, and all this kind of stuff, okay? So the timing of your move here is very important. All right, and when that perception is so high already, meaning everybody wants to trade the same direction, okay, and everybody's expecting a sort of explosive move here, This is normally when, even if a company beats, or even if a company pushes the guidance, whatever the hell it is, most of the time here you're going to get this sort of options preem suckage, I like to call it, where all these people get bled out completely off the open. How many of you guys have seen companies report great earnings and the stock goes absolutely nowhere and people get smoked holding the overnights or trying to go for some lotto tickets? Okay, how many of you guys have been in that sort of situation? A lot of people end up in this situation. Okay, this is another reason why I don't play earnings, because again, we got nothing. You got nothing to go on. There's no tape to read. It's just, hey, overnight, if the news is good, maybe your stock will be up. If the news is shit, maybe the stock will be down. But again, it's kind of like, for me, if I play in earnings, then I like to go for the value bet. What's the value bet? It's like betting on freaking. It's like betting on. It's like betting on McGregor here when he's about to fight freaking Mayweather. All right, chances are he's gonna get smoked. Okay, but if I'm getting 10-1, if I'm getting 12-1 odds here, yeah, fuck it, I'll throw it a little bet in. Okay, I'll give you an example of when the best trade was on, I think it was about 5 years ago on that Netflix, when she was still trading down at around like $60, and it was right here where I think they just, maybe it was right here, might have been a couple of these ones. This was literally after House of Cards was announced. I think it was down here, though. I do think it was down here. And remember, Netflix has since split here, so you're not looking at the adjusted price. The stock was trading around like $60, $70, and it just started to move higher. Okay, and Netflix was maybe trading at around $100 at that time. And if you looked at the chain, there was nothing open. Like there was no, you couldn't even buy over 125, okay, for a strike price, or 120 or something like that. And those options were going for 30 freaking cents, right? Nobody wanted them. And all of a sudden, they beat, and the stock gapped up like crazy. That option that sold for 30 cents opened up at 15 freaking dollars, okay? Because again, the perception was just nowhere, right? Nobody was really even looking at it. The CEO was still heralded as the dumbest CEO on the planet after trying to split the company into Quickster and Netflix, the DVD business and the streaming business. So again, that's where you want to go there for the earnings play, okay? But that's a great example of options mispricing. So for anybody that didn't catch that, remember, you want to add your straddle here. So find out wherever the stock closed, okay? Find the closest strike here and add both sides. That's what you're getting for your expected move. And then you got to assess, like, okay, am I really going to get that move? Am I going to get 14 points? And it's not enough for you to get 14 points because look at where this option is priced, okay? And I'm going to give you a little freebie here that you're going to get in detail when you hit the course here. So I have a sort of options formula that I use for myself. Some of you guys might use your own. I don't use the black shoals. I don't use any of this nonsense. I use common sense, okay? So what I do here, and I'm going to give you a little freebie here, add the value of your option, okay, to your strike price. All right, and let's do it here with this 210, right? The 210 here, add them up, you basically get $5. So in order to make money, okay, on this trade, all right, let's assume you guys bought 480 right here at the close. What does the stock need to do? Where does the stock need to open for you to make even a freaking dime on this thing? Anybody want to take a guess? Anybody want to take a guess? Remember the formula we just did, 210 added up, okay? What are we talking about here? Young is saying 215. Anybody else? Anybody else want to throw a couple guesses? Come on, where you guys at? You talk so much shit on Twitter. You can't talk now. 214, 216, 212. We got some at 2.25, whatever. Yeah, I mean, you need to remember Netflix moves, so there's always going to be some volatility premium in this. And again, these are things that we discuss in detail during the course. The different components of your options, why your option is priced the way it is. But in general, yeah, you're going to need at least 213, maybe. 213 on this just for the option to break even. Just for you to break even, yeah, you're going to need somewhere around 212, 213, depending on how this thing opens, okay, and depending on how the market looks, all right? So, yeah, if you don't get that or you can't see yourself getting over that amount, 214 or 215, well, then what the fuck are you paying this premium for? okay? But people want to because, oh my God, it's Netflix. I gotta go. Well, let's play. Okay? So this is the biggest example there of options mispricing. Happens all the time here. Let's take another example here of the Snapchat. This is a name that I've been trading pretty aggressively as of late. I'm going for a move to 17, and I kind of wanted to show what happened here, towards the highs, specifically when looking at the options. You'll see this often. You'll see this very often in the options world, where they kind of push the sentiment. Okay, they kind of push you to get in these things. Okay, let's take a look at this 17 November call. Okay, so this is a November call for the 17 strike. Okay, now, another thing where I'm going to correlate back to perception. Again, you're not truly going to understand options mispricing until you understand tape reading, okay? Remember, tape reading is all about supply and demand, okay? So simply put, what is happening up here? What's happening up here? You have a huge move up to 16, right? You got flow coming in like crazy, okay? So let's just pull up let's just pull up our flow room here so you can take a look at it. Okay, so let's take a look at snap calls recently here. If this damn thing would load, here we go. Okay, so let's take a look at the snap call. And you can notice here, we got a lot of action, right? October 17 is getting hit. There's some Novembers here going off as well. November 19's here, so some lotto tickets going off as well. So a lot of the weeklies here were getting played pretty aggressively. Okay, so you got flow coming in this thing. What is happening up here? What's happening up here? All right, what do you think is happening up here? If we're just looking at the concept of supply and demand, okay? What's happening up here? A lot of demand here for the option, right? A lot of demand here for the option because, again, the perception is pretty aggressive. Market looks good. Snap is different, right? This is the only time that Snap has been up here, for months here. Okay, and we got a gap here to cover. Chances are it'll blow through 17 bucks, right? That's what everybody is thinking. Okay, subsequently, the demand for these options are pretty high, okay, because the stock is just kind of holding up here. It's just kind of hanging out up here. But as that demand just picks up and picks up and picks up, and there's no break of it, okay, what do you think happens to the perception, okay, of all these folks holding this option, right? I mean, imagine how thin the line is, right? So Lucas is saying some fake outs, absolutely. So you kind of pull the bid, and once they do that in this stock, that's it. Everybody just jumps ship on this option. Remember, we're looking at a November call, okay? If you take a look at the weeklies here, that shit is disgusting. Let's take a look at the 16.5 weekly, which again, a lot of people have piled into this one too, looking for that move through 17 bucks. So now, again, perception is high up here, okay? Perception is very high up here. Demand is very high, aka they want to pay higher prices for this option. They're okay paying higher prices for this option. Now, as soon as that bid drops out, if you're late to the party here, or you're not understanding what's happening up here, all that demand just kind of soaking up there, and there's no price improvement, okay, aka Snap's not going through 17 bucks, then this option is just going to either bleed out in time. Okay, it's either going to bleed out in time, or you'll get an actual directional move where they just literally slap the shit out of this option. Okay, so now you got 60-cent buyers, which is most of the market out there is demand, demand high. Their average price is 60 cents, 50 cents. They're looking to sell this thing at $1, and what happens, right? Everybody gets smoked out. Everybody gets completely smoked out. Okay, this happens all the time, and I'm sure there's 100 of you guys in here right now. I am positive you guys end up in these situations pretty aggressively. Okay, now it's okay to be here. All right, what's not okay is not understanding, like, all right, this demand is super high right here. There's no way you can justify paying 60 cents for this if the price action doesn't break through. Remember, I'm in a freaking weekly. Okay, I'm in a weekly that's going to lose out on time every single day. All right, so it doesn't even matter if the stock dropped out or not. That demand cannot be supported. That price cannot be supported. Remember, let's do our simple math again. Right? What are we going to do? Add the value of the option, and let's just assume 60 cents to the value of the stock. Right? What do you get? You get $17.10. All right, that means everybody that is willing to pay 60 cents for this option already believes and is already paying for the stock to go to 1710. Okay, this is what people do not understand about options. Okay, this is why they'll just pull up an option and say, fuck it, yeah, we'll buy it. Okay, they don't do that simple math right there. They don't understand the perception behind these stocks and why these options are priced the way they are. Okay, because again, they're not tape readers. Okay, most of you guys are not tape readers. All right, this is what I'm trying to bring you towards, because then when you actually sit here and read the tape every single day, you'll be like, okay, clearly there's a freaking seller at 1680, 1675. If we can't get over here anytime soon, I got to start lightening up in my position. Otherwise, my option is going to get destroyed, okay? And case in point, that is exactly what happened. Okay, now let's do one more example here. And then, by the way, guys, if you guys have some stocks here that you might want to look at, I might take a couple here from you guys. Let's take a look at this Baidu, okay? This is an example of a stock that has just kind of run wild here, all right? And it is usually kind of, this is like those 1 out of 10 or 1 out of 20 names. We're paying a high demand for it, or we're paying a high price for these options, is actually worth it. Okay, and again, this is something that you're going to read through your tape reading when you take the course, how to read consolidation tape to see if you're going to get that, to see if you're going to get that move there to the upside. Okay, so let's take a look at the Baidu here, right? Let's take a look at a 270 call. I don't know. We'll just take a look at the weekly here on the Baidu. Okay, and again, we'll look at it for the last 10 days. Specifically, I want to drill down on those 3-4 days of consolidation. Okay, because a lot of you guys will play consolidation and sort of wait for that next move higher. Okay, so if we take a look at the option, you see the perception up here, right? And again, look at the stock. I mean, the stock can move 12 fucking points right here, which is crazy. All right, so even on this day right here, they got this option trading over $2. And remember, you got a 270 strike. The stock's at 260. It's 10 points away, trading $2. Okay, it's trading $2. All right. Now, most people who come in here and take a look at these options, they don't sit here and look at this stuff. It's like, okay, I'm paying $2 for this. I'm literally paying. That means that my stock has to move towards 270 right now. At this very second, this shit better be moving towards 270. If it ain't, I'm losing fucking premium. I am losing premium. God forbid the bid drops out on my stock, which, by the way, you will be able to understand quickly if you are a solid tape reader, understanding bid and ask, supply and demand, and how it looks transaction-wise on your time and sales in level 2. Some of you guys don't even look at time and sales in level 2. So once you see that bid drop out, where do you think this friggin' option is? Like, come on, look at this. There's no even prints here, right? You see how illiquid this is, and you go from $2 to $1 with no prints here. That means everybody who went long up here, there's nobody to sell to. There's nobody to sell to right here, okay? And again, liquidity in an option, okay, is also a very valuable lesson as well, one that you will also learn during the master course too. Okay, so again, understanding when your option is overvalued, okay, and understanding when your option you're getting a solid sort of value for it, that's really where the money is. Okay, so we got a bunch of questions coming in right now. I know I kind of just ran through it. So I will go ahead and take some questions and go ahead and give you guys take some examples there as well. But again, want to throw out here, hit the sanglucci.com/MC, and I'll go ahead and drop the link there for you too. What you're going to get, again, just really basics of options. Most of you guys know how to trade a call and a put, but you don't understand why it's priced the way it is. Understanding the flow that we trade as well, so you guys are going to get access to this whole database real time here and access to the trades that we're throwing out there. And then tape reading. Most of the classes, 3, 4, 5 classes here on tape reading, a little bit of psychology involved, and my own specific options writing strategy. I got a lot of questions here on options writing as well. James, I think, has the funniest one. He's saying, so you're saying we need to sell premium to make money. I'll tell you what right now. I used to be a 80-90% long option trader. Now I'm an 80% short option trader and 20% long. So yeah, to answer your freaking question, you already know, okay? So we're getting a big discount here, 33% discount that you guys are getting on the course here. So your value here is going to be $2,000. I would say that is a good option there as well. Low priced here and ready for you to hit the freaking bid. Okay, so let's go ahead and take some questions here. All right, James, to your question. All right, and James is saying, so you're saying we need to sell premium to make money, okay? If you're a sniper, remember, like, you still have to understand tape reading. Now, a lot of you guys are talking about implied volatility, right? I mean, just look at these just look at the implied volatility, okay? But that's not enough for me, okay? That's not enough for me. You might have a high implied volatility, but that doesn't necessarily give you the right timing on when to sell that option or when to wait for that option to pull back. Okay, and that's where the timing aspect really comes into play, okay, which most of you guys don't have in your back pocket, because again, you're out here buying options when they're priced super high. You might be completely right, okay, you might be completely right on that option, all right, or that idea. All right, but how many of you guys have paid a ridiculously high price for your option and not given it enough time? Your option preems out to nothing. You get out of that option, and then your move ends up happening. How many times have you guys been there? Okay, remember, this is our struggle. All right, anybody who trades options, you know, like, this is where the game is, right? It's about when you buy those options and when the actual price action on the stock supports your payment, okay, of that high price or whatever the hell it is. Okay, Young is saying happens to everyone. A lot of you guys saying yes, amen to that, 100%. But again, it's the timing that will get you to a place where you can understand if a price on an option is worth you paying for it, or guess what? 80% of the time, 90% of the time you buy an option, chances are if you just wait even a minute or even 5 fucking minutes, you're going to get a cheaper freaking price, okay? And Rue is saying, did you write those Baidu puts? Absolutely. When you have a stock that is trending higher, you know, all day you can come here to this chain and just bury all these out of the money puts, okay? And that's basically my game. So again, I will teach you that strategy 100%. During the master course, and again, you know, and basically you're just looking at this chain to just bury all these options. Now you even have next week's, but the problem is, you know, you got earnings here. So let's do the math here on the earnings again. Look at the look at the valuation here, right? Next week's options, 272.5. They're going for $10. Okay, so add these together, right? And you got a $20 move here on Baidu. Right, and the stock's already up what, from 180 to 270, already up 100 fucking points in what, a month? You know what I'm saying? And you're gonna pay that? That's what you're gonna pay? No way, man. No way. No way. Right? I'd sit there and I'd just watch it. Okay. Now, Marky Mark here is saying, what about the contrarian? If the price of the option goes up right before earnings, sell short. If it goes down, buy. I mean, bro, that's like saying, that's like those buy on Tuesday or sell on Monday, buy on Tuesday thing. Or you know, buy before the Christmas rally and shit. Forget all that nonsense, bro. Tape. It's all tape. What is the price doing right now? Does it justify the price that I'm paying for my option? Jesse here is saying, don't I need $1 million to make money in premium writing? Okay, don't I need to focus on long options to get enough money to be a writer? You know what, Jesse? This is something that most people will say who are very impatient. Okay, and I would venture to say out of the 101 people in this webinar that 97 of you are very impatient. Okay, I would say actually, you know what, fuck that, 100 out of 101 of you are extremely impatient. All right, because you wouldn't be in here. You wouldn't be in here if you weren't, right? You're looking for an answer. You are looking for an answer to the woes that you are having currently as an options trader. Okay, so Jesse, to your question, let's say you got a $25,000 account. Okay, let's say you got a and again, this is something that I go through in detail during the options writing portion of the class, okay? How to sell cheap call put spreads, and this is, basically just how to sell out of the money straddles and things like that, strangles and things like that, that are very low risk, and that'll add a nice, 200, 500 per trade kind of thing, so that every single week you're making, 500 to $1,000. And if you have a $25,000 account, or, of course, a $50,000 account is a little bit better, you're looking to make $1,000 every single week, $500 to $1,000 every single week. And, you're going to do that a lot more consistently than you are trying to time fucking a move on Snapchat to $17, okay? You're going to do that a lot more consistently than you are trying to time your moves, especially if you don't know how to read freaking tape, okay? So that's kind of the beauty of the options writing strategy. And Jesse, to Jesse's point, is it slower? Yes, okay? Is it more consistent? Yes. All right, so, you can spend a year, 2 years, 3 years and make a good amount of money, and not friggin' completely lose your ass or, blow out your account 3 times because you're buried in a fucking weekly option looking for a damn move on Snapchat or whatever the hell it is you're trading, Goldman or, whatever it is, and those options burn to zero and you're too stubborn to get the hell out. You know what I mean? So Daniel is saying, are the live classes recorded, and do we get lifetime access to the master course? Let me find out the answer, actually. Charlie here, I know you're in here. Charlie, do we get do they get lifetime access to the master course? The classes are all recorded, okay? The classes are all recorded, and they are going to be stored in your subscription here. Okay, so you're going to just go ahead and check out all these. This is Wise Guys Revealed, which you'll also get access to. This is another add value here. You're going to get, Jesus actually teaches a couple of these classes too, how to trade, some of the sweep orders that we see here, whether you're trading equity or options. And then, of course, you'll get your master course sessions here as well. By the way, we do several live tape reading sessions. And also you get some interviews here too. One in particular here will be a options writer too. This guy is a vol trader too. So this guy will help you with your hedging. If you guys got a big book or you got stock positions that you want to hedge with options and things like that. Okay, so you get all the access here in your subscription to the Steam Room here. Charlie here has told me, yes, you do get lifetime access, Daniel Jones. So, however many times you need to come back and stream classes here in your pathetic Saturday night, you are able to do this. Okay, Andreas is saying, do you accept trades? Can I trade you my wife for the course? I mean, I'm actually kind of thinking about it, right? I don't know why I'm thinking about it right here. No, you cannot trade people for the course, okay? I do not accept trades. However, I did think about it for a second, all right? Any other questions? Any other questions? Okay, guys, remember the discount here is only going to last up until the start of the course. Okay, so that, again, is going to be next Tuesday, all right? And that is when we officially start the course, okay? In general, though, again, with the options mispricing, it's tied to the perception of that stock. Okay, and if you don't have a good read on the perception of that stock, you're always going to be in at the wrong moments when you're trading options. Okay, and you guys can write that shit down because it'll hold true anytime you trade an option. Okay, you will be in at the wrong time if you don't understand the perception of that stock, which you're only really going to be able to get when you start reading tape. Okay, and when I say reading tape, I don't mean just a level 2 and a time and sales. I also mean the actual time and sales and level 2 for these options. Okay, you're going to find large buyers and sellers in these options as well that have acquired, sizable positions in these things, just like guys like myself. I'm running around with 300 contracts right now of December calls on the Snapchat. If I got to move in and out of that position, you better believe I'm moving this option. It's a good enough size. It's a good amount of size here, to move in and out of these options. Sometimes I'll have 1,000 contracts or something. Okay, so there's a lot of paper in some of these. And when I say paper, that means a lot of the larger traders You know, there's a lot of paper, especially if you're looking at names like Apple and things like that. There's huge buyers and sellers in the options for Apple or for, you know, any of these other names that you trade, especially the banks, Bank of America, things like that. You know, you'll start to feel the perception just by what these guys are doing in the option. But unless you know how to read that tape, you're not going to be able to find it. Okay. Jesse is saying, how many part-time traders you see do this successfully? You know what? I see a good amount, but again, those guys are very disciplined. You know what I'm saying? And it's so easy and by the way, I mean, I remember your previous question, Jesse, and I know you're impatient as fuck. So, you know what I'm saying? Like, you know, these guys are very disciplined. They have one strategy, and that's the one that they stick to. You know what I mean? So, Jesse, all of a sudden, let's say you hit some big trade, right? What's that going to do to your mentality, right? So this all has to do with your psychology, which you're going to need. You're really going to need to zero in on as well. Okay, how do you stop yourself from overtrading? How do you manage yourself after you take a big loser? How do you manage yourself after you take a big winner? So all of that stuff that you're asking is purely psychology. So to me, there's nothing that would prohibit you from being positive as a part-time trader. The only thing that would, obviously, is your own dumb ass, which, you know, you got to understand how dumb you really are. You know what I mean? And, you know, you need a class with me here so I can sit you down and be like, listen, you're a dumb motherfucker. You know what I mean? You need some help. Andreas is saying, will you offer the course after the new year? It looks great, but just can't commit. Yes, we are doing one more class, I think December. Charlie, you want to chime in there? I don't know. Are we doing one January? I don't know. So, Andreas, sometimes I'll do the live sessions, and then sometimes I'll stop, man. You know what I mean? Because I got life to live. You know what I'm saying? I mean, I don't want to be stuck here with, you know, then I got to stick here with 10 Jessies. You know what I mean? Jesse's going to be on my couch. Then I got 15 other you guys. You know, it's a little much. You know, it gets a little crazy. So sometimes I'll go in and out. Sometimes I'll be like, okay, I got to help somebody. And then December rolls around, January, I'll be like, listen, I don't want to talk to you. Let's see. So Andres, that's a maybe. Charlie is saying yes. December we're definitely doing. So you should try for the December. We'll of course have some you know, some holiday promos as well. Let's see. Chris Becker here is saying, actually, Michael Buchner is saying, are you scalping? Yeah, I'll scalp too. But I'll only scalp, like, usually I'm trading like a core kind of swing. Like right now I'm just kind of messing around with the Snapchat. But I'll scalp, you know, if I'm looking at Apple today, for example, super bullish, you know, I'll try to find a dip and then just buy a quick 50 lot and make a grand here or there. You know what I mean? Something like that. But, you know, Michael, I'm at my best when I'm not scalping that much. And again, like, you guys got to find what strategy works well for you. And that's another thing we focus on pretty aggressively during the course, because finding the right strategy for you is basically everything. You know what I mean? I mean, combining everything into a cohesive strategy customized for you. Okay? What I do, it might not work for you. You know what I'm saying? And I'm not trying to, I don't push shit on anybody. We're trying to figure out what your, you know, what your game is, what you're good at, and what you suck at. And whatever you're good at, you know, that's where you're going after. Chris is saying, do you use / provide any scripts, tools to track options, premium, and tape reading? Is your method platform dependent? Not platform dependent at all. You just need access to a level 2 and a time in sales. So any you know, advanced sort of platform, any Thinkorswim. I mean, this one right here is Fidelity. You know, Fidelity has a nice little level 2 time in sales kind of thing. You know, so that's really all you need. As far as scripts and stuff like that, I mean, again, you guys are getting, you know, immediate access to the course, or sorry, the Steam room here that we built. This is all proprietary. So this feed alone, by the way, this is tape 2 as well. I mean, if you guys got some, you know, this guy, for example, swept November calls for 27s on that Bank of America. You know, these are all aggressive orders of guys like me who have 10 times the amount of money as me, 20 times the amount of money as me, and they got all the time and patience in the freaking world, you know? So these are guys that you want to pay attention to, you know? So if, you know, some guys out there sweeping 27 calls for November, I mean, and the stock is looking pretty damn good, and the market looks good, and you got all this other action in some of the banks, then damn it, you got to pay attention. So we'll start paying attention to that Bank of America, and we'll wait, you know, we'll try to wait for some dips. We'll try to wait for a day where they rotate into banks, and try to catch a nice 50-cent move. You know, try to catch a nice 50, 60-cent move all the way up to 27. Or maybe we can swing this. There's so many ways that you can play this type of flow. And by the way, you know, it's not only limited to the options traders. Jesus, for example, like doesn't even freaking trade options. So, you know, Wall Street Jesus himself like doesn't trade options, you know. All he'll do is sit there and he'll wait for something to be a little juicy. Maybe it's the steel that he's talking about, Macy's or whatever, and he'll wait for some flow and he'll buy stock, you know. He'll look at some flow that comes in and he'll just sit there and scalp stock. He doesn't even trade options. You know, some of you guys might just write options. You know, some of you guys might be trading futures. But futures, you know, if you're trading ES especially, all of this, what do you think all this shit is? This is all sentiment. This is all tape. All of this is tape. So everything that we preach is tape. Understanding the pulse of the market, the pulse of these options as well. Why they're priced the way they are, why these guys are willing to pay whatever the hell they're willing to pay for, what their intention is. So, for example, this guy comes into the October here, buys these 190s, you know, but to me, this guy's, since he's buying so far sort of out of the money here, you know, maybe this guy's just hedging his long position, and he's just booking, you know, he's just booking his gains on the long side. I don't know. You know, there's so many different things that that someone could do. You know, but sometimes we really see some aggressive stuff. Like, and I'll just throw this out here before closing it up. Again, we get a ton of questions here. Let's see. This Amazon, there was a $9 million call buyer. Actually, fuck it. Let's look at. All right, just so you guys can see this shit. This was the biggest. This was the biggest one that I've seen in a while. Look at this dude, right? $9 million. On this 960, this shit was at the money. This guy paid 36. This guy paid $36 for it. Okay, and this was for a November call. And obviously, the guy's including earnings into the situation. Okay, this guy paid $36 for it. All right, you guys want to see where this shit is now? Here you go. He doubled. That motherfucker doubled. Almost doubled. I mean, he's up $8 million. He's up. I don't know what the hell. What did you do the math? 7.5. He bought it at $36. He bought the shit at $36, and we saw it right here. And look, I'm looking at it like, get the fuck out of here. Who is this guy? You know? And then I start looking at the tape. Obviously, there was a little bit of a pullback, and then it just kind of sat around 960 for a while, and then it was just like buy it all, just buy it, just fucking buy it. And then we caught it to like 990 right here, and and then I'll fish out. Like I'll try to get 1 or 2 days out of it. If it's a big move, it's a big push, everybody wants to be in it. But this guy's got earnings on it too. So who knows? This guy's probably waiting. I mean, if the thing trades up to 1050, like this guy's gonna make $15 million. He's gonna make $15 million, and we're all gonna be sitting here looking at him like, what the fuck? Are you insane? Who does that? Who does that? Who puts $9 million on a freaking Amazon option? All right, the most I've ever gotten is $500,000. I put $500,000 on. Actually, I think it was like 700. Maybe it was like 700. But I had to work for that shit. This guy just came in and swept one order and says, "Yeah, give me that. Give me, give me $9 million of this shit." Who does that? All right. So you'll see stuff like that, and then combine that with the tape reading stuff that I'm going to teach you. You'll really be able to time your move. You'll be able to buy the right option, the right expiration, and trade it the right way depending on what your strategy is. I mean, you could have easily just come in here and sell puts. That would have been your better idea. So even though this thing is down at 955 when the guy bought it, you could have been down there selling 930 puts, 900 puts. You would have gotten 20 cents for a 900 put down there. That's free money. To me, shit, I'll sell 100 of those. I'll make $2,000. Whatever. That's great. So you might want to play the safe way instead of trying to time it and trying to do all this stuff. But again, this is all options pricing. This is all tape. Again, this is all the stuff that we combine here for you in about 13 classes or so. And then you get access to all these freebies here too that we sort of add to the mix. You'll get an intro to options course as well, 1 month free of the Steam Room. Also, we can split it up into a couple payments too, guys. So we do understand, $2,000 is a high price point, but let's all face it. Some of you guys lost 2 G's today. Get the fuck out of here. You know what I mean? Okay, so there's your link, sanglucci.com/MC Remember, take advantage of this fat discount here while it lasts up until the course starts next Tuesday. Hopefully we see you guys in there. If not, I think we had another webinar next Monday as well. All right, guys? Take care. We'll see you soon.